So Offerpad just announced that they received notice from the New York Stock Exchange that it is no longer in compliance with Section 80201C of the New York Stock Exchange listed company manual because the average closing price of the company's Class A common stock was less than $1 over a consecutive 30-day trading period. So yet again, we have another iBuyer company that may be going under. I don't know. This is news that just came in this week, right after Redfin had announced that they're getting out of the iBuying business. We know that Zillow also announced, hey, we're out of that business too. And this is what I've been saying to real estate agents for a long time. And that is this, that as the real estate market shifts into a seller's market and it becomes what most people say a hot real estate market, you see a lot of people, a lot of investors going after the industry. They start to create different model to try to disrupt the traditional real estate model. And then once that changes, once the real estate market starts to shift like we're in right now, you see a lot of those models get out of the business. You see a lot of those models go away. Because here's the thing, for the last couple of years, as I'm having coaching conversations with different agents, one of the most common things that was brought up to me was, well, Brandon, how do I compete with all of these iBuyers? And how do I compete with Zillow and all this? And I said, guys, listen, the reality is iBuying is nothing more than wholesaling. And wholesaling has been around for decades. It's been around forever. There's really nothing different than what these companies are doing, than what wholesalers have been doing and will continue to do. But there's a caveat, and I'm going to talk about that in just a second. They're just doing it on a bigger scale. So a recent report comes out. I want to kind of share this with you guys. And then I'm going to break down, I'm going to go to Offerpad's website. I want to share something with you that may open your mind or eyes up to this model so that if you were ever concerned with it or how to compete with it, that maybe that concern goes away as a result of watching this video. So Offerpad's stock, it slipped below $1 per share. And you can read this article either on Inman or Yahoo Finance. I mean, it's all over the place. It just got announced. Offerpad stock slipped below $1 per share in late October, positioning the iBuyer to be delisted from the New York Stock Exchange. So Offerpad, who, as you guys know, is one of the largest iBuying companies, they're still operating yet after Zillow said we're out of the business. Redfin earlier this month in November said, hey, we're out of the iBuying business too. The New York Stock Exchange said, listen, you've got to get your share price up above $1 or you run the risk of being delisted from the exchange. So in a statement Friday, the company confirmed it had received notice of non-compliance from the exchange, indicating the iBuyer was in violation of the requirement that listed stocks remain $1 above $1 a share. Offerpad's stock has not been above $1 a share since October 26th. And so companies that are booted from the major stock exchange can still sell shares, but those shares are then traded to an over-the-counter market. Such markets may be less accessible to traders and et cetera. So what's happening is as their stock continues to plummet, and I'll show you guys maybe this right now, where they're trading today, you have a lot of their investors saying, hey, man, is this the end of the company? So right now, as I'm making this video on November 21st, here, let's just actually update this to get even more accurate. All right, so it's trading right now at 68 cents a share. So they're not yet in compliance based on what the stock exchange said that they needed to be, which again, they need to be at least at $1 per share for a 30 trading days consecutively. Now, more significantly, investors, okay, so here's what the investors are saying. Investors are often treating a delisting as a sign that a company is in serious financial trouble and possibly headed towards bankruptcy. So I think the challenge ahead for Offerpad and their leadership team is, now that this information is out there, the funding that this company has been getting over the last couple of years, does the well dry up? Well, here's the problem with the whole iBuying business model. So what's happened over the past couple of years, these companies, as you know, maybe you don't know, I'm going to share my screen in just a second and walk you guys through their website. They would go to the homeowner directly and they would offer to purchase the home with a cash offer. Now, for a long time, that really worried a lot of real estate agents to say, well, dude, how can I compete with that? How can I compete with a cash offer? Well, what you didn't know, what was happening is these companies were paying ridiculous prices for these properties that were at retail or sometimes above retail. Well, that's fine in an environment where property values are increasing at the rapid pace that they were over the past 2.5 years. But when that shifts, like we have, or any time in history, that model simply doesn't work. I mean, it's a losing model. You can't pay more for homes than what they're worth, go and put a bunch of money into it and think you're going to flip it for a profit. It's just never going to happen. So as that's happening, these companies are like, yeah, there's no margin here. We can't make it happen. That's one part of it. So that's why you've seen it's been so difficult for investors and wholesalers over the last couple of years too, because property values. Now, let me share my screen and show you the other big challenge that, again, this is why I was never too concerned with their model. But if you go to offerpad.com, you can look at this as well. So here's how their process works. All right. So they say, okay, the process is simple. All right. So they say, hey, get us some pictures of your house. We'll do a virtual walkthrough. Within 24 hours, our real estate experts will evaluate your home and present you with a cash offer. So far, so good. Homeowner says, wow, that's pretty appealing. I don't have to list my house for sale. I don't have to worry about showing it. I don't have to do any of that stuff. Now, if our cash offer works for you, awesome. Now, here's the thing. Their cash offers this is what I think a lot of newer real estate agents are missing. They're a lot lower than what the seller could get if they were to list their home with you retail. Okay, so that's one way to compete. Now, the other thing is this. Let me go to their pricing. Check this out. This is right on their website, by the way. Okay, simple and transparent pricing. I agree. They are very transparent. And the thing is, they're so transparent, I don't understand why a real estate agent would be threatened by this, nor I don't even see the value of their offer. I don't even see it. So their whole thing is their express cash offer. So a strong cash offer, that's super debatable now. Past maybe year and a half, sure. They could maybe afford to give a good cash offer that might compete with what we call a retail offer if they were to list the home, but not anymore. I mean, they can't give that cash offer is what I've been doing for 15 years. If a house is, let's just call it retailed at $300,000, on every single seller lead that I generate, I'm offering them a wholesale price every time. If I can get a property that's worth $300 and I can get it at a massive discount, I will purchase that property because there's built-in margin. Money in real estate's made on the purchase. It's not made on the sale. So their cash offers now cannot compete with your retail list price. That's number one, okay? Now, number two, look at the fee structure. They're charging, not only are they not giving an offer that is as strong as you can get them on the retail market, they charge more. They charge 7% service fee for this service. So let's just really look at this and let's go a little bit deeper. If you're a seller and you get approached by this company, they say, okay, if your house is worth $300,000, we'll offer you, I'm just making up a number, we'll offer you $250,000 for the home. And oh, by the way, we're going to charge you 7% to make the transaction happen. Okay, that's an option. Why would a seller do that? That's the thing. The only way a seller does that is if they're in some type of dire straits, because you don't have to go through the process or headache of maybe listing the home. But for most sellers, the ones that I talk to, certainly the ones that I'm sure you guys talk to too, it's hard to find a seller who is willing to sell their home for less than it is worth. Even if it is easier, they would say, no. I mean, it's quite the opposite, to be fair. Wouldn't you guys agree? Like, sellers are like, no, I want more than it's worth. And if I can't get more than it's worth, I don't even want to sell it at all. That's what I'm used to. I don't know about you guys. So to find a seller who's willing to sell it for less than it's worth, that's very difficult. And oh, by the way, we're going to charge you more than you would have to pay if you were just to list it with a traditional real estate agent, who in return is going to get you more money in your pocket. So the bottom line is this. I don't think that, I mean, you see these companies going out of business left and right. All these discount brokerages going out of business left and right. And this is why I'm so excited for the real estate agent and the real estate industry as we move into this market shift, because our our service delivery and what it is that we offer now continues to stand the test of time, and we get to prove our worth. We can go out into the marketplace and we can earn what it is that we do, and sellers are going to be more open to paying it because we have a product or an offer or a service rather that can put more money in the seller's pocket, net bottom line, net, than these other non-traditional real estate models. And there's real tangible value in that offer. So give me your thoughts. We'll have to really pay close attention to see what's going to happen with Offerpad. I would not be surprised if there's another headline here in the next couple of weeks that they are the next one to say, yep, we're out of the business. But we'll see. We'll see what happens with their investors, and we'll pay close attention.